Stock markets are on fire. The Nasdaq 100 is up sharply since Friday morning. That's what we're going to talk about today. And of course, we're going to give you guys an update on the German DAX and the FTSE 100 as well. All right, so this is the Nasdaq 100. And we had a very nice breakout here on Friday, October 9th. We pushed higher here around, well, in the afternoon, around 2 p.m. London time, 1 p.m. London time. And I got on board myself and bought a bit on the breakout. Tight stop loss just below the lows here. And the reason why I went long is because, as I explained in the last update we did on indices, I said we're working with an inverse head and shoulders with the head, left and right shoulder. And I said a break to the upside would trigger that. And that gives us a target of just shy above the all-time high. As well, we are dealing with a short-term sort of rectangle range here with the break here, suggesting we can trade as high as 12,071. Now, what I did though is that I got out with half of my positions at 11,800 and then the rest of them just shy under 11,900. The market is up already quite a lot. But the reason why I got out of there is just because I had such a good risk-reward ratio on this market here, and ultimately at one point, you know, things will come back. I traded a similar pattern, and the Australian dollar versus the Japanese yen was up nicely, exactly like here, but now just today it came back all the way back to my entry level, and that's the risk when we're dealing with markets. Sometimes if you have a good risk-reward ratio, I find that that's enough target. Like if you get like something like I did, like saying 3 times risk-reward ratio, then it's usually a good idea to get out. That's what I found at least. So what's the next step here going forward then? Well, you know what I did? I booked profits. It doesn't mean that it can't go higher. And the next step here would be for this market to probably come down. If we go down to the breakup point, which we can do, we might not do that. It might come down just a little bit. But if we do come down to the breakup point, I do think people are going to buy there. And I think they're going to remain bullish as long as you trade above the level here from this low from the afternoon on October 8th. That would be 11,488. So I think people happy to buy on a pullback and then probably target these levels again. As for the German DAX, let's see if we can load that chart for us. Let's see, it looks like I have, there we go. This is the German DAX. Remember the best, or the idea I shared with you guys was to buy down here and for this to go upwards. And we went upwards. If you booked some profits already last week, really good. And obviously if you kept it, even better, congratulations. Give yourself a pat on the back. This is a good trade. And this is a super good spot to book profits. Of course, we can go higher. We can always do that. The problem here, though, is that the last major low is down here and the next major high is up here. So if you, for example, would buy here, you know, you're looking at potential reward, you know, 2.5%. Actually, realistically, you have these highs here. So you're looking at potential reward of 180 points. And then how far are we away from the nearest low? That would be 500, almost 600 points away. So the risk-reward ratio is really, really bad. Now you could say, yeah, okay, I'm going to trade on the short-term levels, and you can. And if you do that, good, continue to do so because we are in a short-term uptrend. But if you look at the big levels and levels where big players that dominate the markets, where would they be buying? Well, they'll probably be buying on a dip. And that's what I'm trying to focus on. So if we dip down to 12,860, which is down here, I do think that people will be happy to buy here with stops below 12,612. As for the FTSE 100, the FTSE 100 is in an uptrend. So last week we said if we can take this out, we can probably go upwards. And then we're going to be potentially capped by this trend line and that high there. And you might say to yourself, because a lot of people do this, they say, this move in the Nasdaq is nonsense. It's just on expectations of that stimulus package that's never going to come. Or we have the election and I'm going to short that. Well, instead of shorting something like the Nasdaq 100, which is in a bull trend, it can aggressively trade higher and it's not stuck in something like this, like a downward sloping wedge. Instead of shorting that, I'll short this one instead. Why? Because here you have the prerequisite for lower prices. We are in downtrend since June 8th. It's being weighted down by Brexit, of course. And if we do go up, I do think some people might look to sell here. So that might be a better option if you want to sell, because I wouldn't be shorting the Nasdaq 100 now, given the overall bullish trend in that market. All right, don't forget to like this video. Don't forget to subscribe as well. Then when you subscribe, you get notifications when we publish next videos, especially if you click on that little bell button. If you have any questions, just leave them in the comments. Have a great day, and I'll speak with you guys soon. Thank you, and bye-bye.